I did it. So, today, we are using a T-count. So, stop. Stop! What we are doing is we're taking our numbers from our payroll register, and we have to journalize it. Now, remember when we journalize, because it's been a while since we journalized, you must have debits equal credits. What one comes first? Debits. Debits on the left. Oh, I might break it out.
I think we oughta.
Maybe later. I'm doing it.
Yep.
Okay. So, one of the things I don't like about this assignment, the work together and on your own, is they don't actually show you a payroll register and where the numbers came from. So when we look at this box of directions, I don't want anyone typing. Okay? So right here we have the Metro Company payroll register has the following information. So we have total earnings. Now we know that's column number 3 on our payroll register because you have regular earnings, you have overtime earnings, and then you have total earnings. This is the amount that they earned before taxes. Then you have federal income tax withheld, Social Security tax withheld, and Medicare tax withheld. Okay? And normally we would have health insurance premiums, and then you could have the other column. But in this case, for a Metro Company, they don't have any of that taken out. Okay? So I'm actually going to write over here on this board. I know, crazy. I'm going to erase these journals. It's been a while. So what we have is we're going to have columns from our payroll register. So we're going to have federal income tax. We need to associate that with an account name. Okay? I talked about this yesterday. All of our deductions on our payroll register are going to be a liability. Liabilities always have what word in it?
Liability.
Liabilities always have what word in it?
Oh, ability.
No. Payable.
What?
Okay? So all accounts payable accounts, or all liabilities are always going to have the word payable in it because you owe it. The definition of a liability is anything you owe. So we have to convert this from the column heading where we opened up the tax book or the tax chart, and we found the number. That's how we did it in Chapter 12. Now we have to go through and convert this to an account title. The account title is not Federal Income Tax Payable. Wrong. Okay? It has to equal federal income tax in your payroll register is going to equal employee income tax. Because if you think of federal income tax for running a business, that should be the amount of money that the business owes because they made a profit. Okay? We need this to relate to payroll. To relate it to payroll, we have to throw this word employee in there. Because then we're like, oh yeah, because we have employees, we have to pay it. Now the other one we have, Social Security. I'm abbreviating it because I'm going to write it full out over here. What is Social Security's account title going to be? Yes. Not for the test. I did. So Medicare is going to be yes. Okay. Now, the amount of your net pay is going to equal what? Nope. What account title?
Net pay. Oh, accounts payable.
No.
Oh, cash.
Is that what you said before? Okay. That's why I was looking at you. I couldn't hear you, and I was like, so net pay is going to equal cash. So every one of those columns that we need to journalize, we don't journalize regular earnings. Okay? We are going to go through and use our total earnings. Total earnings are going to equal what account?
Salary.
Okay? So salary expense is going to be the total amount that the business has to pay out because they have employees. Now, that total number does not go to the employees because some of it goes to employees and some of it goes for the tax that we have to pay because we have employees. Social Security, Medicare. Now, if we had health insurance, the answer is not on your screen. What would it be?
Health expense.
Nope, it's not an expense. Nope.
Medicare.
Nope.
Medicine.
Healing. Health.
Health insurance.
Health insurance premiums payable. You're right. Premium
Sorry, teacher. Redo it now.
payable. UW. B. I talked about these just.
Wolves.
Bonds payable. Oh, bonds payable.
University.
No. Has nothing to do with the UW system.
Winnebago.
Universal. United Washington. Is that an airport? Plane thing, United Way?
United Way donations payable. So in our accounting book, we have some examples of other things that are taken out of people's payroll. And that was the other column. And they were either B's or they were UW's. B standing for bonds, that people had money taken out and they invested in bonds, or they had money that was donated then to United Way. And then the money that's donated to United Way is then going to be a tax deduction. We talked about this yesterday. So why I went through and wrote that on the board over here is that way it's up and you can see it. I can't write on the board and have my screen down over here, so then it will be up for a while. Please remember, the most common mistake right here is this account title, and then this run right here. So when we get into another section, we're going to learn about an expense that goes with payroll, and it's not going to be salary expense, it's going to be another one, but that's going to do with those 4 employer taxes. So we are going to take these numbers, and I want you to think about, we know that federal income tax withheld right here is going to go to employee income tax payable. If I pay my employees, does the business owe more money for this tax or less money? More, right? So they withheld $100 from your paycheck. They then owe that $100 to the government. So these liabilities, are they going up or going down? Do we owe more liabilities or less liabilities because we have payroll? Quit guessing. I just said it's more. Okay? We withheld $70 for Social Security out of your paycheck. That business is now liable for paying that. They owe that to the government. They withheld $20 for Medicare out of your paycheck. They now owe that to the government. So these are all now increased liabilities for our business because We took it from your paycheck, and they're going to pay it to the government for you. So these liabilities are going to then be increased. What is the increased side of a liability? Credit. So we're going to credit these liabilities. Now, total earnings. What is my account title that goes with total earnings? Salary expense. Do we have more expense or less expense because we had payroll? More. So our expense is going to go up. What's the increased side of an expense? Debit. So we're going to debit this, and we're going to credit those. My debits and credits are not going to equal. I can figure that out just by estimating. I have a debit for $12,000. Here's $1,100. Okay, so if I average those together, okay, that's $2,000. $2,200 doesn't equal.
Well, that's a problem.
It is a problem. Debits and credits must equal. What am I missing?
The cash.
Cash. How do I find my cash?
Subtract all of the earnings.
It did not give it to us. On your payroll register, you would really get it from the net pay column, but they didn't give it to us here. And that's why I said I didn't like about this assignment, is because they didn't give you the payroll register to go from. They just gave you certain numbers. And I'd rather have you see the whole payroll register, because that's really where the numbers come from. So we know that this total earnings is salary expense as a debit. Federal income tax withheld is employee income tax payable as a credit. Social Security tax payable as a credit. Medicare tax payable as a credit. Now, when you go to record it, APLEA is picky. They want them in the right order. What is the right order? From your payroll register, you start with the first deduction and move left. Okay, so it would be employee income tax payable, Social Security tax payable, Medicare, health insurance premiums, and then others. So you would list it in that order when we go to journalize it. Right now we're only doing T accounts, but when we put them in a journal, that's how we'll roll with it. Okay, so let's do our debit first. Debit is salary expense for $12,600. Employee income tax payable is what? As a credit, 1186. Social Security tax payable is also as a credit of $781.20. Medicare tax payable is a credit of $182.70. Don't forget to take out your handy dandy calculator. Subtract your digits. That's what I'm finding right now. You got to do the math. Now, I got a cash amount of $10,450.10. Anyone agree? How did I find it? Subtract. I took my $12,600, subtract employee income tax payable, Social Security tax payable, and Medicare tax payable. That's my cash. Now, we use T accounts just to get us ready to get things journalized. So now guess what we're going to do? Journalize. Now, we know we're crediting cash, so therefore our journal must be our cash payments journal. When we look at our directions tell me right here to journalize the payment of Metro's July 1st to 15th payroll on page 15 of the cash payments journal, and the payroll was paid with check 415 or 455 on July 15th of the current year. So the first thing that I do is I check to make sure my page number's on there. Bam, it is. Now I put my date. July 15th. What account goes first? Why? Yes. Make sure you go salary expense, not salaries payable. It's completely different. Check number is 455. Now salary expense is being debited $12,600. Now on line 1 is where I put my cash of $10,450.10. We don't have a special column for cash, so it goes right away. Now I'm going to go ahead and put in employee income tax payable as a credit. Social Security tax payable as a credit. Don't forget your cents. Medicare tax payable as a credit. And then when you're done, this should be what your cash payments journal looks like. You have one debit on line 1, a cash credit also on line 1, and then you have 3 credits. Now, if I had health insurance premiums and United Way donations and U.S. savings bonds, I would need to then have 3 more lines. And I would just continue them down right after it. So it's going to take a lot of lines to journalize payroll. It's not a twofer. It's at least 4, but could be up to 7. It's always at a minimum going to be 4, though, because you have to have these taxes taken out of people's payroll. Try that on your own. Should not take you too long. Okay, ladies and gentlemen, let's take a look at application or work together 13.2. Okay. Yesterday, I spent some time talking about the 4 taxes an employer pays. 2 of them are matching. Matching means if the employees pay it, the employer pays it. Okay? The 2 matching taxes are Social Security and Medicare. Okay? Now think about it. It's not employee income tax payable. Why? Why not? So your income tax really is just on your earnings, right? Now let's think about what is Social Security. What is it for? What is Social Security? Not how do you calculate it. It is not the old people disability, but it is retirement. So it's money going into retirement. So oftentimes when you talk about retirement, there can be employee portion and an employer portion of retirement. So in order to fund the Social Security option for people for retirement, there's an employer portion and the employee. Same thing for Medicare. Medicare is health insurance for people after they retire. And it's available typically at age 65 or 67. If something happens where you were injured or you get hurt, sometimes then you can file and get Medicare before retirement age. So for example, my mother-in-law at the age of, I think, 55 had a brain aneurysm. After that brain aneurysm, she was in a nursing home for the rest of her life. Okay? While she was in the nursing home, she was not able to work or earn any income, and then she was then eligible for Medicare. That helped cover the cost of her to survive and to live. Now, the same thing can happen if you had an injury and then you were unable to work, then you would be able to be eligible for Medicare. But typically, we think about Medicare as health insurance for when you're retired. So, employees put amount of money into Medicare so that way when you're done working, that would be available for you. Employers also have to match that. Now, there is a tax base. We talked about tax base before for Social Security and Medicare. Would you agree? Do you remember how much it was? $54,000? That was in our book. Now, the Act of Congress is going to change that tax base. The same tax base is going to be true for Social Security for the employer and the employees. Okay? Now, the 2 other taxes we talked about, we spent a lot of time yesterday talking about unemployment tax. And you determined that I can't collect unemployment in July, but my husband could collect unemployment from the golf course in February. Nature of our work, right? My contract said this is what I'm working for the business. Business isn't open here. That's my responsibility if I want to earn more income to find a different job. Now, our unemployment is at a lower tax base. The unemployment taxes are going to be set at $8,000. The minute somebody goes over $8,000, you no longer have to pay unemployment tax for them. Now, here's the thing. Do you have unemployment tax taken out of your paycheck? No, right? Because we just did that in 13.1. So unemployment tax is an employer-only tax. So we have 2 matching, Social Security and Medicare, and then we have 2 that the employer pays. Federal unemployment and state unemployment. Now I want to look at this number. Federal unemployment is what percent? 0.8%. See that percent sign? A lot of students screw up and just put in 0.8 when we multiply it, and that's wrong. Because you got to put 2 decimal places to the left of it, so it would be 0.008. So the amount of this that you have to pay in is going to be small. Now, state unemployment is 5.4. State unemployment should always be bigger than federal. Oftentimes, students miss that 0.8%, and then they calculate it, and then they get numbers thrown off. Okay, so when we look here, I have 2 employees. They give us the amount of the earnings, $5,100 and $7,300. Why would they give us that? Remember we talked about tax base? So, as of April 30th, did any one of these exceed that tax base? No. Now, we have pay period May 1st to May 1st to 15th. So, this is before their pay period. This is the next paycheck. Is Tamala going to go above that tax base? If I take $637.50 plus $5,100, is that going over $8,000? So how much of Tamala's earnings am I going to pay taxes on? Which is $637. Because we already paid taxes on this $5,100 before. So for this pay period, the employer is going to have to pay taxes on this $637.50. Agreed? Now I think it should be $9,000 instead of $8,000 as I look at this example. Can someone, do you have your book open? 13.2, see? Who can find it first? I have a Snickers bar. 13.2. I'm serious, I have a Snickers bar right here. Who finds it first?
What am I finding?
Tax base in 13.2. What is it? Not find it. You got to find it in your book.
318.
What is the amount? 7,000. See, I knew I was the wrong number. No, sometimes. What page is it on? No, it's not on page 318. Oh, wait. We're in chapter 13, so it can't be 318. On page 374, it does say, first 7,000. I don't know who said 7,000 first, though. Is it in the directions, too? I didn't open up the directions. Who said 7,000 first? No, I don't want the page number. I wanted the amount. So who said 7,000 first?
Yeah, I think that was me.
Okay.
Give them the split in half. First you sold. I want to try Snickers though.
I mean, I guess the page right.
This one got broken, so you guys can fight over that. You're welcome.
You guys like Snickers?
So 7,000. Sorry, I didn't even open up the directions. I'm just going from there. But thank you for telling me Michaela was in the directions. So, Irma, prior to this payroll, did she already exceed the tax base? Because the number is 7,000, not 8,000. So, does the employer have to pay any unemployment tax for Irma? No. So I'm going to go ahead and put over here $637.50. And then I have to put a 0 here because the 0 says nothing happening. This is a hard one. Now, I need to add up my total earnings for the May 1st to May 15th payroll. We know none of them have exceeded the tax base for Social Security because that's $54,000, and we can see that as well under there. So I'm going to take $637.50 and $920 and add those two numbers together. Now, I'm going to add down my unemployment taxes. I don't even need a calculator for that one. That's $637.50. Okay. 4 taxes. Your 4 taxes are either calculated off of your total earnings or your unemployment tax earnings. Okay. Social Security tax, is that going to be multiplied by your total earnings or your unemployment earnings? Total. So you're going to take 6.2% times $1,557.50. And that amount goes right here. Medicare tax payable. Are you going to multiply that by total earnings or unemployment tax earnings? Total. So I'm going to take 1.45% times $1,557.50. That number is going to go straight across. Now, unemployment taxable payable, federal, taxable, I can talk, 0.8%. Am I going to multiply that by total earnings or unemployment tax earnings? Unemployment tax earnings. So you're going to take 0.8% times $637.50. Unemployment tax payable state, is it going to multiply by total earnings or unemployment tax earnings? Unemployment. So you're going to take 5.4% times $637.50. That's going to go across. How do you find your total payroll taxes? Add them up. Did you guys round correctly? I got 157.68. Okay. First thing we had to do was go through and calculate this. Now, I will tell you, if you were working in payroll, the computer system would do it for you. Does that make sense? It would know where it's at, and it would be programmed in, this is the tax base, and it would pull that there. But you still need to be aware of it. Did I do math wrong? 158.68. Do my numbers above equal? That's why I asked, because I do make mistakes.
Yeah, who said yes?
Somebody did say yes. 158.68. I got 158.68 the second time. Usually people turn around and look, I'm like, oh, I did something wrong. Now I should open up directions, huh? So, we have to journalize this as of May 15th of the current year. You will notice we are going to the general journal. Why? Because we are not using any special columns. So let's go ahead and record this as of May 15th of the current year. Whoops. Now, total payroll taxes is my debit. And my total payroll taxes is going to equal payroll taxes expense. My source document is M46 per the directions, and I'm going to put in there 158.68 because my expenses are going up. Now, when we think about my numbers, my 96.57, 22.58, 5.10, 34.43, this is all amounts of money that we owe because we have employees. So my liabilities have to go up. Now, anytime you have payroll, you have to journalize 2 transactions right away. One in your cash payments for the payment of your employees, which is what we did in 13.1. Then immediately you have to calculate your 4 employer taxes. That goes in your general journal. So right here, I'm going to start at the top and do Social Security tax payable, Medicare tax payable, U.S. or federal, unemployment tax payable, federal. Now, the other thing I want to point out, you will notice in my general journal, my 4 credits, my account titles got indented in. Applia does that automatically for you. It's to make it easier for you to identify which ones are your debits and which ones are your credits. Okay, so you're going to do your payroll register first in your cash payments journal. Then you go through and calculate your 4 employer taxes, and that goes in your general journal. Go ahead and try that on your own. If they've made more than $7,000, it goes in as a 0. But you have to pay taxes on everything up to $7,000. So it could be a partial amount of earnings. So for example, if my earnings right here was 6,100, no, let me do 6,700, then I would have to pay $300 worth of that for unemployment taxes, not the full $637.50. If this said 6,700, this is the same earnings. To get to 7,000, I would just need $300, and I would pay taxes on $300.